those of you that aren't Macro Pro subscribers, we have eight calls a year, macro themes, 4 themes calls, and then 4 update calls. And this is probably, it's one of the most important ones, in as much as the one in August was, again, where people are hyperventilating, trying to call bottoms, getting long and all that. What the labor, notwithstanding, doing the real analysis that, Steiner, you just talked about, what it really did was you talk about thrusts, all these guys with their charts. The real thrust is on the short end of the curve. That's a 31 basis point move from, this time on Friday, the last trading day, to where the 2-year yield's trading today. So this all but ensures that we're going to have, the deepest yield curve inversion since Volcker in the early 1980s. And to me, that's entirely the point. Powell speaks tomorrow. Don't forget, he gets up and he says he reads the papers. So he'd be reading headline, GDP up, 2 and change, big jobs beat, people chasing meme stocks. Like, if you think that he's going to be like dovish, like, you're out of your mind. I think, and again, going back to what Powell just said was hawkish. It's just that when all those ODT options came in, those orders, and the VIX got smashed, like I wrote last week, I called it "Here Comes Wishbone," because all the commentary went from, oh, he's hawkish, because he was. He said, I'm not. I see that you guys are trying to price in rate cuts in November, December. I'm not. Market was down, and then these short-term options trades just goosed, the intraday move, and then here comes Wishbone. And then everybody changed their commentary. Oh, he actually looks dovish. He looks dovish. I think Zervo said he sounded chill. It's like, what he said was hawkish. What he's going to say tomorrow is hawkish. What just happened from a labor report perspective was hawkish for what matters, which is the short end of the yield curve. So that's a real important setup here this morning. If we're right, I think that this is going to be minus 90 to minus 100 on the yield curve in fairly short order, i.e. in the next 1 to 2 months. So again, just to make sure everybody knows why that jobs report really moved the currency market, dollar up, short-term rates straight up, and now long end of the curve not going up as much, so the yield curve inverts further. And last point on this is that the last time the yield curve got to minus 80 something, which is the cycle low, was the first week of December after the November rally in stocks, and then people were body bagged for 4 weeks. And I'm old enough to remember December the 28th of last year at this point, gray hair fully loaded, which is when the NASDAQ was on its cycle lows. So to be continued.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.